Hello and welcome to another edition of Stockwatch. So Facebook were under the cosh last week as the Federal Trade Commission was joined with 48 state attorney generals to call for a court-ordered divestiture of Instagram and WhatsApp, essentially forcing Facebook to undo both acquisitions and spin them back into independent companies. So regulators are still a long way of making this happen. However, for the first time, it's a possibility that Facebook can't ignore and they cannot brush this under the carpet. So a New York Attorney General Letitia James stated that for nearly a decade, Facebook has used its dominance in the market and monopoly power to crush smaller rivals and snuff out competition. So among the remedies that regulators are seeking from the courts is what they described as Facebook's buy or bury tactic. So it's basically trying to snuff out all competition. If there is a company that is in the same industry as them that looks to be probably getting a bit more of the market share, then their idea was to buy them, and obviously under their acquisition there won't be a threat anymore. So this is what the whole story is about, and why some attorney generals and the Federal Trade Commission has joined up to try and stop this from happening again. So since the purchase of Instagram in 2012, Facebook's shares have risen threefold, and the company is now nearly worth $800 billion. So it's quite a big statement. And if this court order goes through, what will happen to Facebook's market share and also their share price as well? So very, very interesting to see what will happen as we come to the end of the year. And Twitter has also been in the headlines as well, after inadvertently blocking users from liking and replying to some of President Donald Trump's tweets that he shared inaccurate information about the 2020 election. So basically, after Trump's losses in the polls, could this also mean a loss for his favorite communication tool as well? So will Twitter be hit hard when Trump steps out of the White House in 2021? We'll have to wait and see. So let's just take a look at the charts for some fundamental aspects. So the last time I looked at Facebook a few weeks ago, I saw that after the big accentuation that we got in September, it came into a bit of a sell-off, and now we were going into a bit of an ascending channel, which was quite favorable for Facebook. If we just zoom in a bit more on the areas of interest, we can see that it fell out of the said channel. It was trading in the Ichimoku cloud range, but now it had a bit of an attempted resurgence to get back into the channel. But as you can see, prices are faltering. The last time I looked at this support at the beginning of the ascending channel when prices started to progress. And what I'm doing now is I'm also looking at this still as a support. So if we see prices to keep falling lower, then I don't see any reasons why it can't test this. It's only roughly about a $20 move from the prices we're trading at now to this support line. So it's very, very feasible, especially with the negative headlines that Facebook has been seeing as well. We almost had a slight divergence here, but momentum started to wane. So as you can see, higher highs on the momentum and lower lows on the actual prices. So this is what I'll be looking at in the next few trading sessions. If we cannot get another attempt on the upside of this cloud and probably to the lower border of the ascending channel, then I fully expect prices to move lower. So this is something I'll be looking out for in the next few trading sessions. And just a quick look on Twitter as well. So we've seen quite a big story in Twitter the last few months. We had the 21% sell-off, the drop in price after the social media company reported that growth fell less than expected. So this was the big gap here in October, and then we've had a slight ascending channel, but now we're just waiting to see if prices are going to start dropping. So prices have been trading the whole time in the Ichimoku cloud. We've burst out recently, and now we're looking to see if we can get above this previous point here, roughly about the $52, $53 range. There's not much on the momentum indicator at the moment. We're just seeing a couple of small divergences previous divergences, and now be looking to see if another one's going to be made in the near future. Obviously, if prices keep spiking up, momentum starts waning, we're going to see a bit more of a divergence. But how far can this accentuation go? As I said before, we're trading far out of the Ichimoku cloud, and the Tenkan and Kijun lines of the indicator are trading away from them as well. So it looks like a very bullish market at the moment for Twitter, but as we go into 2021, when it loses probably one of its most popular, well, when it stops giving certain benefits to its most popular user, Donald Trump, will we start seeing some of the prices wane? We'll have to wait and see. So things to look out for as we come to year end as well. So that's all from the Stock Watch today. Thank you very much for joining me. And if you have any questions or comments, please feel free to add them to the post, and have a great trading day ahead. Bye for now.